Have you ever looked at a financial news channel or maybe just listened to a conversation between wealthy people and felt a very specific sinking feeling? It's that feeling like they are speaking a secret code, like there is a VIP club of wealth building, and the bouncers at the door are jargon and confusion. You might feel like you didn't get the invite because you don't know the password. I want you to know that feeling is intentional. It creates a psychological barrier. It convinces you that investing is too hard or too risky for normal people. But here's the honest, unvarnished truth. The barrier to wealth isn't money. You don't need millions to start. The barrier is vocabulary. If you don't know the terms, putting money in the market is just gambling. You are throwing darts in the dark. But if you do know the terms, the lights turn on. You stop gambling and you start investing. So right now, we are going to dismantle that barrier. We aren't just reading dictionary definitions, we are unlocking your ability to build a financial future. Let's translate Wall Street into plain human English. First, let's look at the foundation, the stock. I want you to imagine a massive, successful company. Let's use a pizza shop as an example. This isn't just a local slice shop. This is a global pizza empire worth millions. Now, the owner wants to expand, but he needs cash. So he decides to cut his company, his pizza, into 1 million tiny slices. He sells those slices to the public. A stock is simply one of those single slices. When you buy a stock, you aren't just trading a piece of digital paper on an app. You are buying legal ownership of that company. You own the slice. If the company sells more pizza, your slice becomes more valuable. You are no longer just a customer. You are an owner. Now, this leads to the single biggest psychological trap that beginners fall into. It's the price tag bias. You open an investing app, you see a stock price of $10, and your brain says, "Wow, that's cheap. I can buy a lot of those." Then you see a stock priced at $1,000 and you think, "That's way too expensive. I missed the boat." Stop thinking that way immediately. That is a mirage. To understand value, you have to look at market cap. This stands for market capitalization. Market cap is the price tag for the entire pizza, not just the single slice. Think about it. Would you rather pay $5 for a slice of a tiny personal pan pizza? Or would you pay $10 for a slice of a pizza the size of a house? The $10 slice is actually the better deal because you are getting more pizza for your money. Market cap tells you the total value of the company. A $10 stock isn't a bargain if the company is worthless. A $2,000 stock might be a steal if the company is the next Amazon. Always look at the size of the pie, not just the price of the slice. Next, let's talk about the index, or the S&P 500. Picking individual stocks is scary. It feels like high-stakes betting. What if you pick the wrong one? What if the pizza shop burns down? This brings us to the concept of the index fund. Imagine instead of trying to pick the one perfect apple from a barrel, you just buy the entire barrel. An index fund, like the S&P 500, is a basket of the 500 largest, most successful companies in America. When you buy an index fund, you're buying a tiny sliver of Apple, Microsoft, Amazon, Google, and 496 others, all at once. If one company fails, it doesn't ruin you because you have 499 others backing you up. This is how you sleep at night. It turns the stock market from a casino into a long-term savings vehicle. Now, let's talk about the mood of the market. You will constantly hear about bull markets and bear markets. Here's the cheat code to remember the difference so you never feel confused again. Visualize how these animals attack their prey. A bull attacks by lowering its head and thrusting its horns up into the air. So, a bull market means prices are going up. Everyone is optimistic. The economy is charging forward. A bear attacks by standing up and swiping its huge claws down. So, a bear market means prices are falling. Now, your brain is wired by millions of years of evolution to fear the bear. When prices drop and you see red on your screen, human psychology screams, "Run, sell everything, save what's left." That reaction is called loss aversion. Scientists have proven that we feel the pain of losing money twice as intensely as we feel the joy of making it. But the wealthy? They wire their brains differently. When the bear swipes the market down, the rich don't see a crisis. They see a clearance sale. They see a discount. They buy the fear. If you loved a stock at $100, you should love it even more at $80. But why buy at all? What is the reward? There are two main ways you make money. First is dividends. Imagine you own a rental property. You have tenants. Every month they pay you rent. You don't have to sell the house to get that money, it just shows up. Some established, profitable companies do the exact same thing. They pay you cash, usually every 3 months, just for owning their stock. It's basically a thank you note attached to a check. This is passive income. The second way is capital appreciation, which is just a fancy way of saying the price went up. But the engine that drives all of this is compound interest. This is the snowball effect. Let's say you invest $100, it grows to $110. The next year, you aren't just earning money on your original $100. You are earning money on the $110. Your money makes money, and then, here is the magic, that interest starts earning its own interest. Albert Einstein reportedly called this the eighth wonder of the world. It starts slow like a snowball at the top of a hill, but give it 10, 20 years, and it becomes an avalanche that nothing can stop. The only enemy you have in investing isn't the market crash, it isn't the president, it isn't the economy. Your only enemy is time. Every day you wait on the sidelines because you are nervous or confused is a day that the snowball isn't rolling. If you start today, even with a small amount, you are buying freedom. If you wait a year, you are paying a massive tax on your future self. You now speak the language. You know what a stock is. You understand market cap. You know how to survive the bear. And you know the power of compounding. You are no longer an outsider looking in. You are an initiate. But knowing the terms is just step one. Knowing exactly which buttons to push to buy your first asset is. Step two. I've put together a specific guide on exactly how to open an account and buy your very first stock, step by step, in the next video. I walk you through the clicks so you don't make a mistake. Don't let the momentum stop here. Click over and let's officially make you an investor today.